So we're going to use this incremental analysis for decision making. What do we need for decision making? We need a different type of costs. We already identify which cost we need. We need the relevant cost, which is the cost that's changing between decisions. We need opportunity cost. We're going to consider the opportunity cost, which is the benefits that we losing or we giving up if we choose one option versus another, and the sunk cost, which is never relevant, which is the cost that we already paid. What kind of decisions we're going to make? First one was to accept the special order price. Second one to make versus buy. Next one is to sell a product or process further. I believe that's where we stop. And retain and replace equipment is the other one. Next one is to eliminate or retain unprofitable business segment. And the last one is to allocate limited resources, and how we're going to allocate it, we're going to see today. Let's wrap up very quickly about the acceptance of the special order. Acceptance of the special order was every time we're going to accept a special order when the contribution margin is positive. What that means, as long as the sales price minus the variable cost generate contribution margin, which is more than zero, we're going to go for it. As long as the price offered for that special order is enough to cover the variable cost and to give us contribution margin, we're going to go for it. And there was this example here, which we did in the class. I'm not going to spend time on this one right now. The only thing that I might spend a little bit time is for this question. Do you want me to spend time on this question to do it again?
Yes, Professor, please. Yes.
Okay, let's do it then together. This is the situation. So we have to find out what will be the effect on the net income if we accept this order. So now in order to do this, we better move to Excel spreadsheet. So let me stop sharing this and let's move to the Excel spreadsheet. So can you guys see my sheet?
Yes.
So this company has the capacity to produce and sell 20,000 units per month. So our capacity is 200,000 units. Cost at this level are provided in the table below, which is the table here. Currently we're selling 175,000. So what's our extra capacity or excess capacity?
25,000.
This one minus this one, so we have 25,000 capacity. Now, and the regular selling price is 1.55. Right. Okay. Now, this company come and ask us wants to purchase 15,000. Do we have the capacity to sell them? Yes, we do. And at price 1.05. Right. Current sales will not be affected. Obviously, current sales are not going to be affected by the special order, and the variable marketing costs will not be incurred on the special order. So in the normal operating cycle, what's our prime cost?
Direct labor, direct material.
No, the price, yes, the direct labor, direct material, but how much is it?
Yeah, that's the prime cost.
0.25, right?
0.35.
Variable manufacturing overhead is 0.075. Let's make it like this. Marketing is 0.25. So in normal operating cycle, we're generating contribution margin, right? How much is the contribution margin that we're generating? Will be this one minus this, minus this, minus this. So in normal cycle, we generating 0.875 dollars per item. Now, let's see, this company comes and says, okay, can you sell me 15,000 units with the sales price 105? If we have to produce those units, which cost we gonna incur? Are we gonna have prime cost?
Yes.
Yes, 0.35. Are we gonna have variable manufacturing overhead costs?
No. Yes.
Yes, 0.0775. Are we gonna have this marketing cost?
No, because
No,
they're ordering directly.
they're ordering directly, and it says here the direct marketing variable marketing cost will not be incurred. So how much will be our contribution margin here is the question. So it's gonna be 0.625.
That's correct.
Okay, so if we produce those 15,000 units, how much we gonna generate? 9,375. Is that gonna be good for us? Is it gonna
It's
be
over. It's over and above what we're already selling.
we over and above we're already selling? So the fixed cost not gonna be affected. So that contribution margin is gonna go directly to increase our net income. Make sense?
Yes.
Okay. So what will be the answer here?
It's A because it's
Hey,
increasing
it's
by
gonna increase, right?
9375.
That's correct. You know what I'm gonna do, by the way? I have this Excel spreadsheet here, and I'm gonna save it like this right now. Just give me a second. I'm gonna save it like this, and I'm gonna send you this Excel spreadsheet. And let's use this Excel spreadsheet, and you have it, and you open it, and you work with it as well. How about that? Is that gonna be better?
Sounds good.
Yes, yes.
You're 28, right? So sheet 4 plus. All right. May I touch it? And let me know when you get the email. Did you guys get it?
Yes, I have it.
Okay. So now you have whatever I have. So every time when I move to Excel spreadsheet, you can work with me as well. Make sense? Okay, let's go now back to slides, and let's go with the slides. So we found the correct answer, 9375. Now the next thing was to buy or to make it or buy. The decision criteria here is we're gonna buy it as long as the total cost saving is positive. Basically, If we buy it and we save money, yes, buy it. If we're not saving money, if we end up spending more, we're not buying. Make sure you understand the advantages or disadvantages of buying or making internally, because I'm going to ask you for those one on the final quiz. So now let's see with this question. I believe we did this in class. We don't have to do it here, but let's move. What was the here that the tricky part here was in this situation, we end up with conclusion that we have to make it, because if we make it, we're going to save $25,000. If we make it, it costs us 50,000 for direct material, 75 for direct labor, variable cost will be 40,000, fixed cost will be 60,000, in total 225. If we buy it, we have to pay $200,000 to the supplier, plus 50,000 of those 60 fixed manufacturing overhead who gonna stay. And because of that $50,000, that changed the whole perspective, and we end up losing $25,000. However, if we decide to buy it, then we freeing our capacity. And if you find to do some activity which is gonna generate at least 25 or more than $25, you can go for it. And that will be opportunity. So the opportunity here is we using the free capacity, and we adding additional 38,000 income, which 38,000 income is enough to cover the 25,000 loss if in scenario when we're buying it. Plus we're going to generate an additional $13,000. So in that case, and if you have that free capacity and use the free capacity, yes, go and purchase it from outside. Why? Because not only is going to cover the loss of the purchase, but it's going to generate income for you. Now let's see this question here. This question, I believe we did it in class, but let's do it together. So let's move to Excel spreadsheet. That's the Excel spreadsheet, and let's move to question 2. And once you click on question 2, you're gonna see here the case. Can you see it?
Yes, Professor.
Okay. Can you see it on your Excel spreadsheet now? So we have the direct material, we have direct labor, we have the variable overhead, and we have the fixed overhead. Correct? And we have to make a decision. Should I make those $1,000, 1,000 units, or should I buy them? Now, what's going to happen if I make them? How much going to cost me? Obviously, $40 per unit, but how much will be in total? Well, the total will be 1,000 times $40. That's going to $40,000. And then I can drag and find out how much will be my total cost. So if I make those 1,000 units, it's going to cost me $100,000, because it will be 40,000 for direct material, 10,000 for direct labor, 30,000 for the variable overhead, and 20,000 for the fixed overhead. Now, if we buy it from the outside supplier, we have to pay the purchase price, correct? And the purchase price, the supplier asks for $85. Plus, we can eliminate only 10% of the fixed overhead cost. So that means 90% of the fixed cost is going to stay with us, which we have to cover. So if we buy it, how much is going to cost us? Well, obviously, we're going to get 1,000 times 85. We have to pay to supply $85,000. That's for sure. Plus, we have to pay 90% of the fixed cost. So 20,000 times 90%, we have to pay another. Let's make it as a number here. Those two as a dollar amount. We have to pay another 18,000. In total, we have to pay $103,000. What's the difference?
$3,000.
We are paying
Are we overpaying or underpaying?
We
overpaying.
overpay.
Overpaying. So shall we go for it or no?
No.
No.
Definitely no. Yes. Very strong no. So now if we have to use the Wiley kind of approach, how are we going to make this? For the Wiley approach, if we make it, how much is going to cost us? It's going to cost us $40 times 1,000. 40,000 for the direct material. 10,000 for direct labor. 30,000 for the overhead. And 20,000 for the fixed overhead. In total, we have to pay 100,000. Now, if we buy it, do we have to pay for direct material?
No.
No. Do we have to pay for direct labor?
No.
Do we have to pay for the variable overhead?
No.
No. Do we have to pay for the fixed overhead?
Yes, 90%.
90%. Do we have to pay for the product?
Yes.
Yes. And I have to pay for the product, which will be 85,000. So in total, how much I have to pay? 103.
103,000.
So let's say we are deciding to, if we buy it, let's say here, if we buy the product, what's going to happen? If we buy the product, we're going to save 40,000, correct?
Mm-hmm.
Yes.
Our saving will be 40,000. We're going to save 10,000 on direct labor. We're going to save 30,000 the variable cost. And we're going to save 2,000
Over.
on the fixed overhead.
Yeah.
But we have to pay for the product. So in total, are we saving or we overpaying?
Overpaying.
Overpaying. So shall we go or no? No, right? That's clearly no go. Make sense?
Yes, Professor.
That's what usually the while is going to ask you to do. This is the format that the while is going to ask you. So let's go now to the next one. Keep going with the slides. Obviously, our income is going to decrease with $3,000. And now we know why. So now let's go with the sales and process further. If you remember from the class, I make you this chart and we decide which product we to make and which one not to make. Again, the decision criteria here is we're going to process further as long as the additional revenue or incremental revenue that we're getting exceed the incremental processing cost or additional processing cost, which take us to make the new product. Now, the two decision scenarios first is if we produce a single product, company produces only one product, and that can be sold as it is or processed further. And the second one is the multiple product case, where the company producing multiple products, which are called joint products. And some product can be sold as it is, or someone can be even processed even further. What you have to remember is that all the costs up to the point of the further processing is not relevant for the decision. Those are considered sunk costs. So now let's see this scenario here. We have this company which manufactures single product which is table. Each unfinished table sells for $50. Currently has unused capacity that could be used to process each table further and sell it as finished table. Cost information is given to produce. This is the cost to produce the unfinished table. So if we have to produce the one unfinished table, we have to spend $35. And when we sell it for 50, we're generating $15 contribution margin per table. Make sense? Now the question is, shall we go further? If we go further, what's going to happen is, if we decide to go with the finished table, direct material we're going to increase with $2. Direct labor going to increase with $4. Variable manufacturing overhead is going to increase with $2.40. Fixed manufacturing overhead is going to stay unchanged. But now we can sell the table for $60. How much more we can sell the table? Currently we sell it at 50. If we make it unfinished, or we can make it finish, we can sell it for 60. How much more we can generate per table? $10. So now we have to see if this cost is more than 10 or less than 10. Let's go to Excel spreadsheet and see what we have to do there. Let's go to question 3 on the worksheet on the bottom. And we're going to have the questions sitting right here. So if we have to do unfinished, what we're going to have? We're going to have sales price. And then we're going to have direct material. No, actually, yes, direct material. Then we're going to have direct labor. Then we're going to have variable manufacturing overhead. And then we're going to have fixed manufacturing overhead. Correct?
Yes.
So sales price is 50. Direct material, 15. Direct labor, 10. Variable overhead, 6. Fixed overhead, 4. How much will be in our net income per table? Around, it's gonna be 50
15.
minus 15 minus 10 minus 6 minus 4, $15 per table. Now let's do the calculation if we finish it. If we have finished table, how much we can sell it?
60.
60. Sales price will be 60. But direct material is going to increase with $2. How much will be direct material now?
17.
17. How much will be direct labor? Increase with $4.
14.
40. Then we're going to have variable overhead, which is going to increase with $2.40. How much going to be that?
That's 8.40.
8.40. And then we're going to have fixed manufacturing overhead, which will be
4.
$4. In total, how much we're going to generate? Can you see it?
Yeah.
How much we're getting?
16.6.
16.6 per product. Shall we go for it?
Yeah.
Yeah. We're going to generate dollar and how much?
Yeah. Like
$1.60. So let's see what's the difference. How much is the difference? Finish minus unfinished. $10 increase. How about on the cost?
that's $2.
Cost is it's going to cost us $2 additional on the direct material, $4 additional on direct labor, and $2.50, $2.40 on the variable overhead, no changes in the fixed overhead, right?
Yeah.
So how much per product? This one minus 2 minus 4 minus this minus this. That will be plus in this case. Sorry. Let's change the formula because we are minus here, so I can easily get this and get the calculation. So how much I'm gonna get extra?
Oh, 1.6.
$1.60. Shall we process further?
Yes.
Yes.
Yes, absolutely, yes. Okay, let's go back to the slides. And how are we gonna do this? This is another way to do it. Pretty much the same way that we did it. If we sell it as it is, and if we process further, what's gonna happen, and the differences in the dollar amount with the final increase in our net income. This is if we're doing only one product, table, process further, or sell it as it is. Now let's go with the multiple products. Multiple products is when we have multiple products, those are produced from a single raw material, and we have a common production process. Those are referred to as a joint products, the one that I show you on the graph on the board. And products become identifiable at the split-off point. Now, costs which happen before the split-off point or before the point that we split the products, that cost is not relevant. So we not consider that cost. Example for the joint products will be dairy that we already saw, milk, which for milk you can go with whole milk, skim milk, ice cream, meat, packing, and we can make a meat, hides and bones, or petroleum. We can make a gasoline, lubricating oil, kerosene. Now let's see in our example here, we're gonna go with the raw milk, which goes through the common process and producing two products. From the raw milk, we're getting cream and we're getting skim milk. Joint cost happen in the common process, which already happened, but again, we're saying those are not relevant. In the chart here, we're going to see that raw milk on the common process, which have a joint cost. Again, up to this point, all the costs are irrelevant. We don't consider those one. We only consider the cost after. So first option is, we go with the cream. Now with the cream, we can sell it as a cream, or we can process further and sell it as a cottage cheese. With the skim milk, which is the other product that we can get from this raw milk, we can sell it as a skim milk, or we can process it further and produce condensed milk and sell it as a condensed milk. Again, the joint cost, those costs are not relevant. We're only going to consider the additional processing cost when we're making decision, should I go with skim milk or should I go with condensed milk, or should I sell it as a cream or should I go with the cottage? Now, if we want to go with the cottage cheese, from cream to the cottage cheese, we have to spend 10,000 additional. If you want to move from the skim milk to condensed milk, we have to spend 8,000 additional. Now, let's see first one. We're talking about only about the cream moving to cottage cheese. If we sell it as a cream, we're gonna get $19,000. But if we sell it as a cottage cheese, we can sell it for 27. How much additional sales we're gonna get? That's 8,000. but it's going to cost us 10,000 to produce it. So what should I do? Sell it as a cream or make it cottage cheese?
Sell as cream.
Sell it as a cream. Why? Because if I move to the cottage cheese, I'm going to lose $2,000. Make sense?
Yes.
So in that case, don't sell it as a cream. Don't go further because you're going to lose $2,000. How about the other one? Skim milk to condensed milk. If I can sell it as a skim milk for 11,000, or I can process further to condensed milk and sell it for 26,000. How much additional am I going to get?
15,000.
15,000. But it's going to cost me 8,000 to process it. Should I process it? Yes. Why? Because I'm going to get $7,000 more. Make sense?
Yes.
Okay. So tell me, what do you think about this?
Incremental.
It is incremental. Yes. Incremental is the one. Incremental is the one that we're looking for here. Only the incremental cost. How about this one?
Cost of labor per unit. D.
So what's the qualitative factor? And what's the opposite? What's
This
the other
cannot
one?
be measured in numbers. This
Okay.
quantitative measured in numbers. Qualitative is not measured in numbers.
Okay.
And
Thank you. So if you say quantitative, which one is measured by number? If you say qualitative, which one is not measured by number?
so in this, D is the answer.
Okay. So number D, the D will be correct answer. Good. So let's go now to the calculation question. And let's see what we're going to do with this calculation question. This company manufactured two products, alpha and beta. Cost 80,000. What we said about this cost, that's irrelevant. Why? Because it's the sunk cost. 5,000 kilogram of alpha can be sold as split off point for $20 per kilogram. And then we have, or we can process it further for additional cost of 20,000, and then we can sell it for 25 per kilogram. 10,000 kilogram of beta can be sold as it is at $15 per kilogram, or processed further at additional cost of 20,000 and sold for $16 per kilogram. Now let's move to the Excel spreadsheet and see what we can get there. Move to question 4. And you already have the question here,
Alpha, beta.
right? Now what we have here?
We have two products.
Two products, alpha and beta. How
Beta.
many kilograms we selling from alpha?
5,000 kg.
5,000 kilograms here. And beta?
10,000.
10,000 kilograms. If we sell it as it is, how much?
20 per kg.
20,000 per kilogram. So in total, how much we're gonna get? If we sell it at $20.
Oh, I don't get it.
100,000.
100,000. Now, if we process further, how much we can?
Additional is 20,000.
So how much you're gonna
So
sell it?
20,
25,
25.
right? $25. How much is the additional that we're getting?
20,000.
25 minus 20, we're gonna get $5. Correct? $5 more. Make sense?
Sorry,
How
I
much is
couldn't.
the total additional revenue here?
Sir, I didn't get it. We sold
So
when
the question, so watch this. We sell it at $20 as it is. If we move forward, we can sell it for 25.
oh, $5 is additional.
How
Okay.
much more we
I
can
just
get at
saw the
$5?
total.
Right. So, but how much is in total? That will be $5 times 5,000 kilograms, right?
25,000.
So we're gonna get additional 25,000. How much is gonna cost us to make it?
Additional cost is 20,000.
20,000. So are we making profit here
Yeah, 5,000.
or 5,000? How about the beta?
15 per kg.
15 kilograms, $15. So that is gonna give us total of
10,
150,000, right?
Mm.
If we process further, how much we can sell it?
16,
16. How much additional we getting?
1,
$1. Over 10,000 times 10,000 kilograms. How much additional profit we're gonna get? Revenue,
10,000.
but we
And
have to
the
spend.
cost is 20,000.
We have to spend 20,000.
We are losing 10,000.
We're losing 10,000. So what should I do with
Decrease,
beta? Should I process further or sell it as it is?
sell at limit.
Sell it as it is at $15, get 150. With these guys, process further, get another $5,000. Make sense?
Yeah.
All right. So,
And sell the egg.
so what you can interpret this question? Watch this. Imagine you have apartment to sell,
Mhm.
right? You have one apartment, and here you have one apartment. You can sell it as it is. Actually, we don't need this one. Anyway, I'm gonna leave it, but we technically we don't need it. Let's get rid of this. You have this apartment, and you can sell it right now. You can sell it, let's say, for $100,000, and you can generate $100,000. But you have option. What will be that option?
Sell at
Option
limit.
is you can sell it. Watch this. You can sell it, and you can get additional. Let's say, what will be that? You can sell it. You can process it for. You can do some improvements in the kitchen, right? You can do some improvement in the kitchen, and you can sell it for $135,000.
Additional is 35.
So how much will be the additional revenue that you can get? I can get 35,000 additional,
Yeah.
right? But it's gonna cost me to renew the kitchen. It's gonna cost me, let's say, $25,000. Should I do the kitchen renovation?
Yeah. Even though we are getting.
Look at the numbers.
Yeah, okay.
Yes.
Yes. Why? Because I'm gonna get $10,000 more.
More.
Make sense?
Okay.
Yes.
Do you understand this? This is the practical application of this thing. And at some point, you have to make that choice. And trust me on this, that's literally you have to make one choice because at some point you're going to have end up with the property. The question will be, should I sell my property the way it is, or should I add additional just to renew something, just to change the carpet, or just to change the floor? If I change the floor, how much going to cost me? And if that improvement is made, how much additional I can sell, for how much additional I can sell my apartment? And if you increase the market price with more than the cost, Go for it. Make sense?
Yes.
Yeah.
Keep this in mind. If you have to save this Excel spreadsheet for yourself, save it for yourself. And when you have a property,
Mm-hmm.
say thank you. All right? Think and then say, oh, there was this professor that was telling us that's how you can increase the value of your property and you can end up with more cash. Because at the end of the day, nobody's give you that extra cash. So let's go back to the slides. And what's going to happen with this one? We're going to increase the profit with $5,000. If we
Awesome.
continue with alpha only,
Awesome.
right? If we go with the beta, then we're going to lose. So with beta, sell it
Okay.
as it is. Now, the next question that we're going to have in hand is the next decision that you have to make is, should I keep my old fridge or should I buy a new one? Or should I change my dishwasher by buying a new dishwasher? So decision criteria is, you're going to replace the asset only and only if the new asset increase the income. Not because you don't like the color of the asset, or not because you don't the asset doesn't fit on the overall kitchen, only when you end up with income. If you want to be rational. So now, for simplicity, we're not going to consider time value of the money. Also, we're not going to consider the capital cost allowance, which is the taxable deduction for the tax purposes on the assets. And the last thing that we're not going to consider, we're not going to consider income taxes. Just pure calculation of the numbers, nothing more, nothing less. Now, what we have to keep in mind here that first, what was the book value? Book value, if you still remember, was the original cost, the amount that we paid, minus accumulated depreciation up to that point. Book value is never relevant. Why? Because it's a sunk cost. We already pay for it. We not consider it going forward. Salvage value, however, we have to consider that one. Salvage value, you can also remember it as a residual value,
Yeah.
right? So what
Yeah.
was the residual value? The residual value is the money that we can get from the asset at the end of the life of the asset. And the last thing that we have to remember is the useful life, or how long we're gonna use the asset to generate income. Now let's see the question now. This company considered to replace one of their old machine with a new machine. Now, if the new machine is purchased, variable manufacturing costs will decrease from 160 to 125 per year. And we have the information. Now let's move to the Excel spreadsheet. And let's move to question number 5 at the bottom of the worksheet. And we're going to have here already set up for us. Can you see it?
Yes.
So what we have the old machine, right?
Yeah.
How much is my variable manufacturing cost?
So we have one solving this type of question. We have to make it.
Sorry?
We have to remember this thing while solving refresh or repair.
Yes. I would say yes. I couldn't clearly hear you, but I would say yes on your question. So now let's go with this one. We said the book value, that's irrelevant. So we're not going to consider this one at all. Make sense?
Yes, it does.
Okay. We're gonna strike it out like this. Those 40,000, strike it out.
Because it's sunk cost.
It's a sunk cost. Forget about it. Now, how much is my variable manufacturing cost? If I keep the old machine, how much I have to pay? 160,000, right?
Yeah.
But this is per year. How many periods we gonna use this machine more? 4,
We're gonna use 4 years.
right? How much will be in total?
640,000.
640,000. If I keep the old machine, I don't have to buy the new machine, right?
Right?
And if I keep the old machine, I'm not gonna sell it,
Okay.
right? So I'm not gonna get anything from the salvage value because I'm not selling it. I'm using it. So it's gonna cost me $640,000 over the next 4 years. Make sense?
So basically, in the old machine is the time period we're using and the repeat and cost, variable cost one.
Right. So if we move to the new machine, how much will be our variable cost per year?
125,000 times 4.
125,000 per year. Then
Yeah.
we're gonna use it for 4 years. So the cost will be this one time 4, 500,000, right? That's how much will be our cost. Now, on top of that, we have to buy the new machine. How much will be the new machine?
120,000.
120,000. But I can sell the old machine now. If I'm not using the old machine, if I purchase the new one, I can sell the old machine. How much I'm gonna get?
5,000.
5,000.
5,000. So how much will be my spending here?
615.
So what should I do?
A new machine.
Get the new machine or keep the old one?
You keep the old one.
No,
But it's gonna
we'll
cost
be
me
buying the new
640.
machine. We'll be
You
buying
should
the new
get the
machine.
new machine.
Should I buy the new machine or should I keep the old one?
You should replace and buy the new machine.
I
Yeah.
should replace it by the new machine. So let's see. If I keep the old machine, what's gonna happen? If I keep the old machine,
You have to take.
it's gonna cost me.
40.
It's gonna cost me this one minus this one, right?
Yeah.
I'm paying $140,000 more, right? I'm gonna save 120 because if I keep the old, I don't have to buy the new one,
Mm-hmm.
but I cannot sell it. I'm losing the 5,000. So in total, I'm losing 25. Make sense? But if I replace it, what's gonna happen now? I'm gonna save. How much I'm gonna save on cost?
140.
140. I'm saving on cost. I have to pay for the new machine,
Mm-hmm.
but I can sell the old machine for $5,000.
Okay.
So where am I? Obviously, if I replace it, I'm gonna make $25,000. If I keep the old machine, I'm losing those $25,000. Make sense?
Yes.
Yeah.
So what shall we do?
We should buy the new machine.
Buy the new machine. So how can you interpret this question? Very simple. Another thing for you to think about it. Imagine this. Now, what I'm thinking about the question now. You have a car, right? You have a car. Which car is old traditional car which running gasoline? Make sense? Are you guys with
Yes.
me?
Yes.
You're
Yeah.
having the car which running on gasoline. Now, the cost of because you're driving around 15,000 kilometers per year, the cost of the gasoline, let's say, is $3,500. Over 10 years, you're going to spend $35,000 on gas, only on gas. Now, you have a new car, which is hybrid, which is going to reduce the cost in half. So you don't have to pay that much on gas. So, but you're going to reduce it by half. So the new cost will be 3,500 divided by 2. So you're going to pay $1,700 only. Over 10 years, you have to spend 7,500. So that gives you saving of 7,500, right? Now, but you have to buy the new car, which for new car, let's say you have to spend $75,000. Now the question is, for how much you can sell the old car in order all these things to make sense? What's the bottom line that you have to spend, you have to sell the old car in order this to make sense?
Can we repeat the question?
Do you understand
Yeah.
what I'm saying? So if I manage somehow to sell the old car for $50,000, salvage value, so I have to spend this one and this one and this one. So where am I? Now I'm looking for what I'm looking for. 7,500, keep the old one. So how much I have to spend on the old car to make all these things to make sense? Are you following me here? I'm trying to find out where the break-even is, 57,500. That should be the break-even. So if I sell the old car with the one that I currently have for 57,500, then I'm indifferent in the both decisions. Make sense? Do you understand
Yes,
this,
it
Lord?
does. Yes.
Yes.
If people give me right now 57,500 for the old car, it doesn't matter to me. Am I gonna drive the old car and spend 3,500 over the next 10 years and spend $35 or 35,000 on the gas, or buy a hybrid? The cost will be exactly the same. But if I get more, if I get more than 57,000, let's say somebody pay me 59,000 for the old car, then I should definitely sell it. Make sense?
Yes, it does.
So the
Yeah.
other option is to reduce the gas consumption. If the gas price goes down, or if I using more efficiently my hybrid car and have reduced the cost for 1,500 per year, that can generate me even more saving and can justify the purchase of the new car. So do you understand this logic now? This is for the car. Now, can we translate this for the fridge?
Yes, we can.
What
Yeah.
we're chasing here on the fridge? Give me options here. How much is the electricity consumption, right?
Yes.
Yeah.
If I currently, let's say my fridge consume let's say how much will be $50 per $50. Let's say $50 per month. Now $50 time 12 months. Sorry, it's gonna be $50 time 12 months. That's 600 per year. Over 10 years, that's too much. Let's go with $30. $30 per month. That's over 10 years, that's $3,600, correct?
Mhm.
Now, but if I buy a new fridge, which reduce the cost of the electricity by half, then I have to spend only $15. Then I have to spend only, sorry, that will be equal to $15 times 12. I have to spend only $180. Make sense?
Correct.
Now, let's get rid of those one. So now the cost is $1,800. The question is, I cannot sell the old fridge, nobody's gonna buy it, right? Because the salvage value here will be zero. As long as the cost of the new fridge is below $1,800,
Yeah,
I'm
we're
in,
gonna,
I'm indifferent. Make sense?
yeah, otherwise we would rather will.
Right. So let's change this one, old car and new car. And you're gonna have this calculation for your purposes. Now there are other things that you can consider, but as you can see, this is just very, very, very simple calculation here, which you can use one day for your purposes.
Yeah, now I understood.
So now you understand, should I change my fridge or should I not? Make sense?
It can be used in our daily life to make like.
Yes. You can use this for everything. You can use this for the dishwasher. You can use this for the oven, because as you can see, the only thing that improves now in the new appliances is the efficiency. And if the new appliance give you enough efficiency over the period of time, which cover the cost of the new appliance, go for it. Let's move now to the slides. So where we end up here, getting the new machine, right? Getting the new equipment because it's going to save us $25,000.
Correct.
Tell me, what should I do here?
I think it's is A, because the cost is relevant in your decision making
Yes.
between
Yes.
one
Even though I kind of disagree with the way the question is formulated, because the salvage value is technically, it's not a cost, right? It's
Yes.
kind of a stream of money coming in rather than cost. But is it relevant? Yes, definitely it's relevant. To be relevant, not cost, just relevant. That will be I'll be more comfortable with this case. Otherwise, it will be confusing, because technically salvage value is not a cost; it's more like a money coming in. Make sense? So now let's eliminate. Let's go to another decision. Since we know now where is the time to change our fridge or move to the hybrid, let's get now another question, which is going to help us to understand which product shall we keep, and can we keep product which looks like unprofitable. So management, you have to make it sometime decisions. Should I keep this product line, or should I keep this segment, or should I keep this customer? The decision criteria here is you eliminate that customer as long as you improve the net income. If you improve the overall net income, if the net by eliminating the customer, net income increase, go for it. If the net income decrease, no go. Key assumptions here are everything lies on the fixed cost. And more specifically, what kind of fixed cost we're running. If we have fixed costs which can be eliminated, yes, we can save on the fixed cost. But if we have a fixed cost that we cannot eliminate, then we're in trouble. For example, watch this. Imagine I'm in a household with 3 kids, right? All of them have a cell phone, so we all have a cell phone. I'm paying, we're having Wi-Fi, which we're using for the TV and everything. I'm paying $50 for internet. We to have Wi-Fi in the house. If I get rid of the kids, can I avoid the internet cost?
No,
No.
because even though you are using
So what kind of cost is the internet? Avoidable or unavoidable?
on and on.
Unavoidable. So based on the internet, should I get rid of my kids?
No,
No.
already.
No. But watch this. Because the kids are naughty, they're always breaking something. And cost of the repair of everything that they're breaking in the house is, let's say, $60 per month.
That
So
can be avoidable.
if I get rid of the kids, can I avoid this cost?
Yes.
Yes. So do you understand now which cost is avoidable, which one is unavoidable?
Hmm.
Make sense?
Yeah.
Okay. Let's keep going now. Before we go this one, let's move it here. Now, how are we going to consider this? Very simple. We're going to consider effect of the related product in a line of the segment. The decision is fixed cost. It can be allocated to unprofitable line. And if that's happened, those fixed costs, because they're inappropriately allocated, then gonna be absorbed with the entire company. If that happen, the net income will decrease. So the decision criteria here is we're gonna keep the product or segment unless the fixed costs eliminated is more than the contribution margin loss. So what that means, watch this. How we get contribution margin?
Sales minus variable cost.
Sales minus variable cost, we're getting the contribution margin. Then what we have to deduct?
Oh,
Fixed cost, right? And getting the net income.
yeah,
When the net income is positive, on which scenario net income is positive?
only the when sales is
When the
contribution
contribution margin
margin is greater than
more
fixed.
than fixed cost, right? If the contribution margin is more than the fixed cost, then the net income is more than zero.
Yeah.
Correct? When the net income is negative, when the contribution margin is less than the fixed cost. Make sense? Then no income is less than zero. So again, we're gonna keep the line, product line, if contribution margin is more than the fixed cost.
Yeah.
Or in other words, if I eliminate this one, that will be the fixed cost. Now I can save it, but I'm losing contribution margin. If the fixed cost savings is less than contribution margin loss, no elimination. But if the fixed cost saving is more than the contribution margin loss, then we can improve the net income. Make sense?
Let me
Why is that? Because if the contribution margin is less than the fixed cost, means if we eliminate that one, that's what's going to happen. The fixed cost saving will be more than the contribution margin loss. Make sense?
Basically, you're telling us that
Opposite. I'm telling you the opposite, right? So I'm telling you, if the contribution margin is less than the fixed cost, I'm losing money,
yeah,
right? So if the fixed cost saving
yeah.
is more than the contribution margin loss, eliminate the product. Why? Because in that case, contribution margin is less than the fixed cost. So don't spend those fixed costs. Yes, you're not going to get the contribution margin, but the contribution margin is less than the fixed cost. Make sense? So save on the cost, eliminate the contribution margin, you're going to get money.
Basically, you are telling us that like if contribution margin is 500
Yes,
and fixed cost saving is 600, then we
yes,
will have to eliminate.
yes. That's exactly what I'm saying. Make sense?
Mhm.
So now let's see it in the example. This is our example. We're going to have those three divisions, three product lines, and we have to decide, shall we eliminate the one that's losing money or not? Again, don't forget, if we see improvement in the total profit, total income, yes, we're eliminating this. But if the total income goes down to what it is right now, no elimination. Let's go to the Excel spreadsheet and see how that goes. That will be question 6. Let's move to question 6. Can you guys see it? Can you guys see my screen?
Yes.
Yes.
So we have all this information. So what we're saying here is, let's eliminate these guys. If we eliminate these guys, what's going to happen? Pro's going to stay, right? 800 is going to stay. 300,000 is going to stay. Then we're going to have 520 staying and 210 staying. Then we're going to get these calculations. We're going to get that calculation. Now for the fixed cost, we're going to do something else. We're not going to get this calculation for the fixed cost. So now my total sales will be $100,000 less. Why? Because I eliminate this one.
Yeah.
My variable cost will be $90,000 less. Why? Because I eliminate this one. My contribution margin is going to be this one plus this one. It's going to be 370. As you can see, I'm losing 10,000 on contribution margin because I eliminate this product. Make sense? Are you guys with me?
Yes, we are.
So what's going to happen with the fixed cost? The actual fixed cost will not going to change.
That's correct.
So how much will be my fixed cost now? Same.
Same 160.
So where am I now? This one minus 160, 210. Is that improve my situation?
No, it hasn't.
No, it hasn't. So should I eliminate it?
No, will not.
Absolutely.
No,
And-
because we're gonna lose 10,000. Which is the 10,000 comes from the contribution margin for the champ. Make sense?
Mhm.
In other words, am I saving on the fixed cost?
No.
No, but I'm losing 10,000.
Yeah.
That's your loss right there. Okay, let's go now to the slides again. And again, if we do this, our income is going to be $10,000 less. So as you can see, 160 now are allocated to the other two lines, but it's still 160. We're not improving anything. So we're losing the contribution margin from the champ is gone, so that affects our total income. So that will be another explanation in terms of a wily kind of way to do it. If we continue, that's going to happen. If we discontinue, if we eliminate it, that's going to happen. So as you can see, we're losing contribution margin of 10,000, but we're not saving anything on the fixed cost. That means everything is lost. Means don't eliminate it. Tell me what you think here.
Answer is B because it's a fixed cost.
It is a fixed cost, yes.
Yeah, it's not like a relevant cost and should be included.
That's correct.
Yeah, I am wrong.
Okay, go. Awesome. Let's do the question now. Oops, this question. In order to do this question, let's move to the Excel spreadsheet. On the Excel spreadsheet, what I want you to go is to question 7. And now we're going to start doing the calculation. What is this? Now we have product A, product B, total, right? So Mackenzie manufacturing sells those two items, product A, product B. The company is considering dropping product B,
So we'll be looking after A1.
right? And it's expected that the sales of product A will increase with 30%.
So 10,000 into 30%.
Right. If the product B is dropped, the fixed cost of 2,000 will be avoided. So let's go.
4,000.
So product B is gone, right?
Yeah.
Sales 0. Direct material 0. Direct labor 0. Contribution margin 0. Fixed cost 0.
2,000.
No, 0. We
Oh, that is
eliminate it. We eliminate it completely.
yeah.
Operating income 0. Gone. Now what's going to happen with product A? Sales going to go up, right?
Yeah.
So sales going to go 10,000 time, time 1.3. If the sales of the items goes up, sales goes up. How about the cost?
Direct material
Also is going to go up. Also going to go up with 30%. We're increasing sales. That's a variable cost. Make sense?
yeah.
So that will be 2,500 times 1.3. Then we're going to have 2,000 times 1.3. So how much will be my contribution margin now? This one minus this one minus that one.
Professor,
Yes,
so where are you getting your 1.3?
1.3. What's the increase?
30%.
30%. So my original is 10,000, right?
Yeah,
30% increase. How much will be the increase?
that's 30% of 10,000. That's
It's gonna be equal to this one times
times
30%. So 3,000. How much is in total now?
30.
13,000. Make sense?
Yes.
So how can I get the 13,000? I have one. So this one is 100%, right?
Mm-hmm.
And this one is 30%.
Yeah.
So 100 is 1. 30% is 0.3,
Yes.
right? So if I want to get the total, what do I have to do? I have to get the original
I
time
know.
1.3. 1 is to keep the, what is it? Because if it's 1, 10,000. But
Yes.
I want to increase it with 30%. Time 3 and give me the 30. Make sense?
Oh, yeah.
If I
Is
want to
that
increase it with 40%, let's see if
two
here's 40%, what I have to do? 1.4.
Okay.
Make
because
sense?
we add the original plus the increase, so that's
Right.
formula like for one
Yes.
driving.
I'm chasing the direct effect,
Mm.
not
Okay.
only the increase,
All right.
right?
Thank you. Yeah.
So that's why I add in here 1.3, 1.3, 1.3 to get the contribution margin, which contribution margin also is going to be 1.3, right? If I'm adding 1.3 on those, this will be 1.3. What's happened with the fixed cost now?
So when will be the sales increase? We have to see. So the variable cost increase by that, right? Because
But
we buy more,
yes,
we have
1.3, 1.3, 1.3. Now with the fixed cost, what's going to happen with the fixed cost?
it's decreased by 2,000 in the total.
With 2,000, right? So from
So
6,000, they're going to go down to
4,000.
minus 2,000. We're going to go to 4,000. Where we are, making money or losing money? From where we are,
Losing.
losing. Make sense?
Yeah. So we are not going to drop this product.
Right. So where we are, shall we go for it?
No.
No, definitely don't go. Why? Because we're gonna lose this one, 3,100. How much we losing? This one minus that one.
1,100.
Do you want to lose those money?
Absolutely not.
Absolutely not. Better keep it, right?
Yeah.
Okay. Let's go with our slides. So where we are, what will be the correct answer here?
Decreased by 1,150.
1 decrease with 1,150. And the last thing that we have to do is to allocate the limited resource. You have to understand, every time in life, we're gonna have a limited resource. Now, in our personal life, what is the only limited resource that we have?
Time.
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 So the question will be how we can manage the limited resource in order to get the maximum benefit. Make sense? So if we have a time and we know that the time is the one that we is the limited resource. Now, in order to maximize the benefit, what we have to do, we have to find the combination how to use the time. How much to sleep, how much to entertain, how much to study, how much to do this, how much to do that, how much to do this. Again, based on the goal. What's your goal?
To maximize your time.
That would be one thing, but then you're gonna have a goal in your life. What's your goal in your life? If my goal of my life is to achieve a doctor degree, but the age of 20, then I'm going to maximize my limited resource. I'm going to find the combination of the limited resource that I have in order to get what I want within the time frame that I want. Make sense?
Yeah.
The same
Yes.
thing with you. That's why sometimes you're giving yourself, okay, I want to get this master's in 2 years. So where is the constraint here? Time. So what you have to do, you have to work on the time to find the combination. Which combination is going to give you what you want on the period of time that you want. And then you're going to see, okay, if I still have to work and I still have to study, from where I'm going to start cutting hours for the entertainment, most likely, for sleep. and all the other activities. Instead of wondering about the future, I'm going to stop less wonder about the future. I'm going to focus on the now so I can get what I want, and then my future is going to come. So in this case, all input resources are limited. You will usually have, what will be that? Floor space in the company, raw material, direct labor, machine capacity, manufacturing, those for the manufacturing company. So you as a manager, you have to decide which product to make to maximize the net income. And within the limited resources that you have, you're going to focus on not on the product that gives you the highest contribution margin itself, but on the product that gives you the maximum contribution margin within the limited resource. So the decision criteria is select the product or product combination that's maximizing the net income within the constraint. So let's see how this is going to work. We're going to have this product. We have product 1 and product 2. Limited resources, machine hours. Which product we should focus to maximize the net income? Let's go now to the Excel spreadsheet and figure out and think about it. Let's go to question 8. And we're going to have those two here waiting for us. So, based on the contribution margin only, which is my profitable product?
Deluxe cases.
Deluxe case. That's number 1, that's number 2. So I should focus everything on product 1, correct? However, I have a limited resource. Which is the limited resource? Machine hours. So what I have to find out, how much is my contribution margin within the limited resource? What I'm chasing, contribution margin per machine hour. How can I find it? Well, I have the contribution margin per unit, and I know how many machine hours take me to produce 1 unit. So what I have to do? Cost, contribution margin per unit. So that will be, sorry, contribution margin per machine hour. So that will be contribution margin per unit divided by machine hours which are required to make that unit. So my contribution margin per machine hour, if I produce deluxe case, it's gonna be $20. Because in 1 hour, how many products I can produce? How many other items I can produce for 1 hour? If it takes me 0.4 hours to produce one. What do you think? 1 divided by 0.4, right?
Right.
How many items can produce? 2.5.
2.5.
How about on the other one? 1 divided by 0.2. How many products I can produce?
5.
5. How much my contribution margin per product?
1.
No. Contribution margin per product. This is
8.
not. Contribution margin here we have 8, and we have here 6. So this one is more profitable. So how much will be contribution margin per unit? This one, time, 2.5, $20,
Oh no, buza.
right? So now here, it doesn't matter how you're going to get the number. Are you going to get the number by simply contribution margin per unit divided by the machine hours, which are for 1 unit, or you're going to find out how many products you can produce in 1 hour, and then contribution margin per product time number of the products is the same. So in one case to get it is contribution margin per unit divided by the time that you need to produce 1 unit, $30, or get how much you can produce per hour and get the same number. 5 times 6 gonna give you exactly the same. So in that case, on which product I should focus? Before I was focusing on the deluxe, right? Deluxe was my profitable. Now who is my
Yes.
profitable? Within the
Standard
limited
cases.
resource. Now we're gonna go with the standard case. Because only and only if you focus on the standard case, you can maximize your income. Make sense?
Yes.
Okay. Let's go back to the slides and finish those slides now. So once we get the contribution margin per unit within the limited resource, then we can figure out on which product we should focus. So for the short-term decision, focus always on the product that give you the greatest contribution margin within the limited resource. Long-term, well, you have two other things to consider. Change in the contribution margin or remove the constraints that you may have on the product. So basically, in this case, if we increase the machine hours, then we can produce all the products that we need. Incremental analysis approach on the theory constraints is the approach is useful to identify and manage the constraint. So once you find the constraint, then you can manage it. How we can manage the constraint? Out by another machine or hire people to eliminate those machine hours that you're missing. Or try to find add a new shift in the machine. Increase the usage of the machine. But again, you have to identify the constraint and then find a way to work around the constraint. Tell me what you think here. If I'm working on the full capacity, on which product should I focus on?
Letter D, the one with the highest contribution in
Margin, right?
unit of limited resource.
Right. So it's very simple. If you think about it, it's very simple. Imagine this. You have 8 hours. No, let's not. You're international students. And what's your constraint? You can work only 24 hours per week, correct? Are you guys with me?
Correct.
Yes, that's correct.
That's correct. So now, imagine this. You have 2 jobs. One job pay you $18 per hour, the other pay you $22 per hour. Which job is going to maximize your income?
$22 per hour.
$22. Why? Because you have only 24 hours per week. Now, if the $20 per hour can give you, that job can give you only 10 hours per week because it's part-time job and they want you only for, let's say, only 2 days, 16 hours. Right? What you gonna do? What will be the most profitable scenario for you to maximize your income?
You'd have to multiply both and see which one gives you more
Okay,
money
let's go.
for the time.
Let's multiply it. Let's go to the Excel spreadsheet. Let's multiply it and let's see what will be the profitable here. Again, your capacity is how much is your capacity? Your capacity is 24 hours per week. Correct? That's your capacity. You have 2 jobs. One job pays you $20, $22 per hour, and the other pays you $18 per hour. On the $22, they can offer you only 2 days. That means 16 hours. let's say 2 days, and the other one also offer you 2 days. So in other way, here 16 hours and here 16 hours. How many hours you need for the both jobs? 32 hours, right? Can you work 32 hours?
No,
No. So what you have to choose?
the one that pays you the higher amount for 16 hours.
So what I'm gonna do? What will be your working schedule then? How many hours you gonna go work on the $22 job?
2 times 8 hours? I'm not too sure I understand the question though.
So the question is, if you have only 24 hours, which combination of working hours gonna give you the highest income?
The first option, $22 for 16 hours?
So first, what you're gonna do first? I'm gonna work 16 hours on the first job, which is gonna generate me 16 times 22, right?
Yes.
But my limited resource is the hours. So basically, I have only and only 24 hours. So
So you
out of
can
the
work 8
24 hours,
hours.
so now I'm use 16 hours. How many hours left?
8 hours.
8 hours. What I'm gonna do with the remaining 8 hours?
You can work the second job.
Go to the second job. Make sense?
Yes.
And that will be the only combination that's gonna give you the highest possible income. Make sense?
Yes.
In any other combinations, you're gonna get less than $496.
That's correct.
Make sense now?
Yes.
So first you're gonna utilize all the available your demand on the first job that pay you the highest. And if there anything left on the hours, you're gonna focus on the second job. And that's the only combination. This is the combination that's gonna give you the highest possible income. In any other combination, you're gonna get less than that. Let's see. Let's pretend that you here you have let's say you're working on the first job. Let's say that will be 16 times 22, and that will be 8 times 18. So let's say here you're working, and that will be equal to 24 minus 16. So let them read from each other, and now this one is here. So if you work 15 hours here, what's happened now? Your income going down.
Correct.
If you work 14 hours here, your income going down. Let's say you're working only, let's say you want to utilize the other hours, 16 hours, so you're working only 8 hours here. Yeah, you're utilizing the second job, but now you're losing money. So your winning combination here is put everything on the first job, which is paying you the highest paid, utilize the full demand, and after that focus on anything else. Now, if you're at the third job, then will be, again, you have to do the same calculation. And then you have to work around the shifts. That will be your practical application on this one. To choose what will be the winning strategy in order to get, when you have only 24 hours, which job should I choose first, which job should I choose second? So let's go with this one. Should I base my decision purely on the contribution margin? How much is my contribution margin, by the way?
342.40.
9.60 minus 6.20. How much is that?
3.4.
3.40. Should I base my decision on this one? Do I have a limited resource?
We have limited time per unit.
What's my limited resource?
4 hours.
Machine hours, right? So what I have to do? 340 divided by 4.
4.
What I'm getting?
0.85.
So what will be the number that we need from our decision?
It's A.
0.85. And that concludes this chapter. Now, what's going to happen next week for you? Next week on Friday, you're going to have a quiz. You know that, right?
Yeah, this coming Friday, right?
This coming Friday. So what will be on the quiz? That probably the question that you want answer. You're going to have 4 questions. Not 5, not 3, 4. What kind of questions you should expect? So first, you're going to get questions from every chapter. After the from week 4, week 5, week 6. Those are the one. This week, the incremental is not part of the test. So you
chapter, right?
sorry?
4, 5, 6 chapter you're gonna test us.
Week 4, week 5, week 6. So those are 4 chapters. On week 4, we have chapter, let me see exactly which chapter we have on week 4. On week 4, we have chapter 7 and 8. 2 chapters we cover in week 4. Week 5, we cover chapter internal control, which was chapter, where are you, chapter? Internal control chapter, there's no number of that chapter. And week 6, we cover cost volume profit analysis, which is chapter 10. Those are the chapters that's going to be covered. So, now, from those chapters, you're going to have questions on the high and low method. On the high and low method, you have no excuses. You have a special recording with the calculation. I want you to know the high and low method. And I want you to know what's the variable, what's the fixed cost. Second question will be in the cost volume profit analysis. I want you to know how to calculate a break-even point in number of units and the total sales. So what do we need? You need the fixed cost. For the number of units, you need the contribution margin per unit. For the total cost, you need contribution margin ratio. The question is going to give you enough information to have and find how much is the fixed cost, how much is the contribution margin ratio. You have to find those one. And I want you to explain, I want you to be able to explain what means break even. The other question will be, third question will be, I want you to calculate, to know how to calculate direct material, direct labor, and manufacturing overhead from conversion and product cost, prime cost, conversion cost, product cost, direct material, direct labor, manufacturing overhead. And I'm going to ask you for value chain as well. So the last question will be on the internal control. For the internal control, you're going to have scenario. And you're going to have a specific questions on which control principles you have to focus on. It's not going to be all the 5, only the one that the question asks you. For those principles, I don't want you to, how can I say, explain why those principles are violated, rather than I want you to tell me, what's going to happen and what kind of harm these people can do because of those 2 are violated. So I want you to identify the situation, in which situation those principles are violated, and what will be the possible opportunity, what they can do to harm the company. And if once you identify those opportunity, I want you to provide a recommendation to shut down those opportunities and to improve the situation, internal control. Those are the 4 questions. Very straightforward. Either you know them, either you don't. It shouldn't take you more than half an hour, but you're going to have more than that. So again, quiz not going to start directly from 12:30. We're going to start with the lecture, and once we have everybody in the classroom around 1:30ish, we're going to start the quiz.
Professor, I have one
Yes.
question.
Yes.
I have to graded our assignment. All of them.
I graded not all of them. I graded half of them.
Oh, so I
So
thought
I needed a little bit more time today. Probably by the end of today, I'll be done.
yeah, they were sharing and I got panic for why didn't I?
Yes, I have a few more to grade. Probably you're on the bottom part of the list, so it's coming. That one's coming. The last thing that I want to discuss with you is a few questions from the Excel spreadsheet, which can help you for your assignment. So if you have to, for those of you who have to run, I have 4 more minutes. For those of you who have to run, when the time comes, you just run. For those of you who want to stay, please stay. What I'm going to do now, I'm going to get a snapshot of the people who are here, and those are the people who's going to get attendance today. For the rest, they're going to be marked as a non-attendance because I'm missing a lot of people, and the school start chasing me for attendance. So that will be one thing that I have to do.
Professor,
Yes.
I was in another class.
Yes, just stay for me for a second to get a snapshot of who is here. Okay, now you can go.
Thank you, Professor.
So go for another class. Then check the Excel spreadsheet, which will be posted. For those of you who can stay a little bit. I'm gonna go quickly over the Excel spreadsheet. I'm gonna give you some ideas. So that will be question. Can you guys see my Excel spreadsheet?
Yes. Professor.
Yes. So that will be question 9, 10, 11, 12, 13, which are question 10, question 9, question 8, 7, and 6 from your assignment. So let's do it very quickly and you can go. First question, dealing with, that's question 10. The people that's doing some seats on the canoe and they come up with the cost. So we have to decide, should I make it or should I buy from outside? Now, what costs me to make it? Direct material, I have $23. Direct labor, I have $14. Variable overhead, I have $12. And fixed overhead, I have 20,000 fixed overhead. Now, how many units I need to make? We're talking about here to produce or to buy 3,050 units and 50 units. So now, if I have to produce those units, my direct material will be $750. My direct labor will be $42,700. my variable overhead will be 36,600. My fixed overhead is already predetermined, is 20,000. So my total cost, if I have to make those 3,050 units, gonna be 169,450. If I have to buy it, then my cost for direct material will be 0. My cost for direct labor will be 0. My cost for the variable overhead will be 0. Now, currently we're making, so 24% of the overhead will be avoided. So if I can eliminate 24% of the overhead, how much overhead is going to stay with me? That will be 100% minus 24%, right? That will be overhead that's going to stay with me. So out of the 20,000 overhead, I can avoid 24, but the other 76, I still have to pay. Plus, I have to pay for the supplier, and I have to pay for supplier 51 cents for that 3,050 units. So in total, it's going to cost me 70,750. So if I decide to buy, what can I save? I can save direct material. Make sense?
Yes.
I can save direct labor. I can save variable overhead. I can save some of the fixed overhead. How much I'm going to save? Exactly 24%. But I have to pay for the new materials. In total, where am I? Am I saving or losing money?
Losing money?
Losing money. Should I go or no?
Don't.
Don't. That's what you have to do on your assignment in Wiley. Let's make it colorful. Actually, you already have it, so you can do it with me. Anyway, I'm gonna post this one at the end and on Blackboard. Now let's go with the next one. Next question. This company incur cost of $34 per unit, of which $19 is variable cost, to make a product that normally sells for 57. Foreign or wholesaler offered to buy 5,000 units at $30 each. This company will gonna have an additional cost of $1 to imprint a logo and pay for the shipping. Now the question is, in my normal selling, so we don't care about the normal selling in this case. What we care, how much this person's gonna pay us? How much gonna pay per unit? Do we know?
Yes, 30.
$30.
Yeah.
And it's gonna cost us. The variable cost, normal variable cost is how much?
5,000.
19.
Incur 34 per unit, of which $19 is the variable. $19
Okay.
is the variable cost.
Mhm.
And do we have an additional cost?
Yes, an additional $1.
$1.
So
So how much is my total variable cost now?
20.
This one, that additional cost will be $20, right? Those two together, this one plus this one. So what's my contribution margin? If I'm selling for 30
10.
and the variable cost is 20, How much is my contribution margin?
10.
$10. And we're talking about how many units?
5,000 units.
5,000. So if I do $5,000, how much will be my increase in sales?
Hmm.
1,500, right? 150,000, sorry. How much will be my increase in the variable cost?
Okay.
So am I gonna get any benefits?
50,000.
50,000. Should I go for it?
Yes.
Absolutely, yes. Make sense?
Mhm.
Okay. Let's go another one. This question. This company produces giant stiffer bears. Each beer consists of $10 variable cost and $7 fixed cost. Sells for $43. If I sell in $43 and $10 of variable cost, my contribution margin is $33, correct?
Correct.
And $7 is the fixed cost, so I'm making $26 per unit,
Mhm.
right? If I'm making that $26, so now somebody come and says, can you sell me 9,600? How much they paying for each?
The $12.
$12.
$12.
Right.
How much is my variable cost? Still $10, right? So how much is my contribution margin now?
Two.
So,
$2 up to this point. Do I have to incur more cost?
Yes.
Shipping cost of $1.50.
$1.50 for shipping. So am I generating anything?
50 cents.
50 cents. Oops, that will be equal to this one minus that one. I'm generating 50 cents. But how many products they want?
9,600.
So how much am I going to generate?
4,800.
Do you want them?
Yeah.
Yeah, definitely.
Then go for it. If you decide that you don't want, don't go. Make sense?
Yes, it does.
Let's go to the next one. This company manufactures golf clubs in 3 models. For the year, the page line has a net loss of 10,200 from the sales of 217,000. So the sales is current sales is 217,000. 1, 2, 3, right?
Correct.
Variable cost
195,300.
300. So when contribution margin, this one minus that one.
yeah.
Correct.
Fixed cost 31,900.
Right.
Where's my income? Negative 10. The what they saying, right?
Yes.
So if I eliminate it at this point, if I eliminate this at this point, what I'm gonna do? I'm gonna save the fixed cost. I'm gonna save that fixed cost, correct?
Correct.
But I'm gonna lose the contribution margin. So is my saving more than the lost contribution margin?
Yes, I think.
Why do you think? Which one is higher? Fixed cost or contribution margin?
Fixed cost.
Fixed cost. So if I save 31,000 but I lose 21,700, am I saving?
Yes.
Yes. Yes.
This is at this point. Now, is this what's happened? Now, let's eliminate it. What's going to happen? If I eliminate it, sales gone, right?
That's correct.
Variable cost gone. Contribution margin, bye-bye. Fixed cost, let's see how much I can save. If page is eliminated, 15,000 of the fixed cost gonna stay. So how much I can eliminate? This one minus
15,000.
15,000. So I can eliminate only 19,000, 16,900. So this one minus that one, right? That's how much I can eliminate. So what's the differences? Difference will be, I'm losing this. It's lost. Sales lost. Now on the variable cost, I'm going to save it. I'm saving the variable cost. But I'm losing the contribution margin. That's gone.
Correct?
How much I can save on the fixed cost?
That minus that. 15,000.
15,000. Is the 15,000 saving on the fixed cost enough to cover the contribution margin loss?
No.
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 So where we end up?
Loss.
Loss. How much? No, that will be, sorry, that will be here plus.
7,000.
That will be plus.
Minus
6,000.
6,000.
6,700 gone. Should I eliminate it? Should I eliminate this division?
I think so.
Again, can I save? Am I losing or if I eliminate it, am I losing or saving?
Your current loss is minus 10,000. If you
No, my
eliminate
current
it,
loss, but if I eliminate it, my loss is gonna go further with another 6,700.
so keep it.
So keep it.
Yeah.
Right? With this division, with the way it is, I'm losing 10,000. If I eliminate it, my loss is 16,900. What do you want? Losing 16,000 or losing 10,000?
Losing 10,000.
Yeah.
Right? So how much loss you gonna save? 6,700.
Yes.
Right? You're losing 6,700 less with this division compared to if you eliminate it. Make sense?
Yeah, it does.
So basically, yes, you're still losing money, but you're losing less. So the safe loss is also gain. So the last one, this company has a factory machine with a book value of 157,000 and the remaining useful life of 4 years. The new machine is available. So what's the book value? Is it relevant for us?
No, it's not.
No,
No.
that's a sunk cost. Remaining useful life 4 years. The new machine is available cost of 245,500. This machine will have 4 years useful life with no salvage value. Is there any salvage value on the old machine?
No.
No,
They don't.
don't. So the new machine will lower annual variable manufacturer overhead from 594 to 507. So how many years we have?
4 years.
Oh,
4
yeah.
years. That's per year. So we have 4 years. How much is per year? If we keep the old machine, how much is the per year? Variable cost per year.
245,000.
No.
No,
Per,
sorry,
per
that's
year. Per year. Per year. For 1 year. Not in total. For
13,
1 year.
15.
yeah, I have to calculate.
No, you don't have to.
No,
594.
524.
594 per year. How
I
much,
see it.
if with the new machine, how much is the cost per year? 507, right?
Yes.
So how much is now is the total? Total is this one times 4,
Mm-hmm.
right? And how much is this one? That will be this one
Times 4.
times 4. Are we saving? If we do
No.
this, if we go with the new machine, are we saving on cost?
Okay, yes, we are.
Yeah, we're saving. How much we saving? 348,000. However, if we keep the old machine, I don't have to buy the new machine. Correct?
Yeah.
That's correct.
But if I have to buy the new machine, I have to pay for the new machine. How much I have to pay?
245.
500. So in total, I have to pay. I'm gonna have to pay that one. So where am I?
You're still gaining.
I'm gaining. Of course, I'm
Yeah.
gaining.
Yes.
So should I go for it or no?
Go for it.
Go for
Go for
it.
it. Because I'm gonna save $102,000.
Yes.
Excellent. Now, what you can gain is you can do your assignment. So let me show you where I'm gonna post this one for you, and you can have it. And that's the last thing that left for me to show you where I'm gonna post it, and you can use it for your purposes to do your assignment, and you're good for today. That will be, where are you? Second, that should be your section here. That's your section, chapter 7, incremental analysis. And the incremental analysis, you already have recording from the previous semester, but now I can upload this file, and the file is gonna stay right here. Let me see, this one is the one, open, and then we're gonna add it, and you have the file right here, calculation for March 2nd, section 28. And that
Thank
will
you very
be
much.
and that will be the end from me.